Welcome everybody to episode 1 of the Go Mortgage podcast. We don't have a name yet, guys, but we will introduce you both. Firstly, I'm your host for today. My name is Daniel from Dawson D, but it's not about me. It's about Go Mortgage. Xavier and Alana, welcome to your own show.
Thank you very much.
How are you feeling, firstly? Were you excited for this journey that we're about to embark on?
Yeah, well, I'm a bit nervous personally because I'm not good with the cameras and the microphones and things like that, but I'm sure it'll be fine as I loosen into it.
Absolutely. How about you, Xavier?
And I think it's pretty exciting. It's a way to reach our audience in a more broad way. So yeah, really cool. I think let's do it.
Fantastic. Well, it's episode 1. We're really excited, and we're going to break this down into 2 main parts. The first part, we're going to hear a little bit about yourselves individually and, of course, the Go Mortgage story. And then part 2, we're going to go into some fan questions. We've got some interesting questions being sent to us. We're going to go through them. We're going to bust a few myths, which will hopefully give the listeners a bit of a better understanding. But firstly, let's hear about you guys individually. Xavier, I'll start with you. You're the founder, director. Is that your title here?
Correct, yeah.
Overall boss man. Yeah.
Boss man.
I'm not sure I like that boss title, but anyway. Yeah, definitely founder. Like it's been a long road now, so I'm happy with where we've come to, I guess. I know you asked me, what's your story? I'm like, how long do we have?
Well, take us back to the beginning, because you were founded in when, 2004?
So we were founded in 2006.
Oh, 2006.
I actually started in finance a little bit before that, 2004. And I discovered property a few years before, and that's really where it starts. I'm an import to Australia, like a lot of people are, and in that journey, I did optometry before that wasn't recognised, and so one day I landed with the thought that, hey, if I'm going to spend my life here, what am I going to do?
Yeah.
The degree I've just finished is not working. I don't want to do it again. That'd be silly. So I looked around, and financial planning was something attractive, and that came at the same time where I bought my first property in Australia. I didn't know much at all back then. Ended up going to the ANZ branch, and it all just happened. It's only later you discover how these things work. But short story is that when I joined the financial planning industry, it imploded. That was in 2000. There was margin calls everywhere. I went, whoa, what is this? And back in the day, financial planning wasn't really about planning people's financial future. It was more about selling shares. Also at the same time, for whatever reason, personal, we ended up selling the house. Okay. And 18 months later, I discovered it doubled in value.
Wow.
Yeah. It was
a bad problem to have.
Well, it was no longer mine, so it was a problem.
Yeah.
Like I'd missed out on half.
And which
of
part of Australia was this? And where did you? Because you mentioned you were born overseas. Where were you born?
Correct. So I was born in Belgium.
Okay.
I did grow up in South Africa, hence the twang. And this was on the Sunshine Coast.
Okay.
So that led me to look at property closely. I left financial planning, went into property, and never looked back. Property is just so powerful, not just as a roof over your head, but wealth creation in Australia through property is just too easy, and it's what creates most of the wealth for people. So got into property, then found out that getting the finance was always hard, and that's how we created Go Mortgage, to try and give borrowers and mainly investors a better service, a better result, a better outcome.
So how long were you living in Australia before Go Mortgage was actually founded? And what were the first few steps, your initial memories of it?
So that was about 6 or 7 years, I suppose. No, maybe a bit more, 7 or 8, because my first few years in Australia, I just bumped around.
Sure.
Enjoyed the beaches and surfed, and didn't think about the future. So
his early photos dictate that he was very much the surfer boy as
really?
well in Australia. Yes, very much
long
so.
hair or?
Yeah.
Yeah, really?
Yes, long hair. My kids give me stick about that. But anyways,
lovely. We'll get some photos up for the viewers.
Hopefully not. That's right. It's not necessary.
Got some old marketing content somewhere.
So yeah, it just one thing came after the other, and I suppose the main goal was to try and do better every time, to try and give better service, better result, better outcome. So it kind of grew naturally into suddenly, hey, we need a service, and then we didn't just need a service, we actually wanted to make business out of it and look after our clients, I guess. So that was the beginning. Learned from, they often say, overnight success, but it really often takes 20 or 25 years
Sure.
to get there. So there's been a lot of bumps along the way, I guess, where we are today, the expertise, the knowledge, and the reasons why and how we do things has taken that long.
So fast forwarding to now, and then we will go back. How many staff do you now have? How big is Go Mortgage?
Okay, so Go Mortgage is a team of 10 at
Wow.
the moment. So there's I'm still broking because, you know, part of the love of doing it is still there. So there's Alana, myself, and Leona, who's not here today, so as brokers, and then the rest of the team is support, whether it was to get the deals over the line or look after our clients on an ongoing basis, because we're really about, it's not just about getting a mortgage, it's about onboarding a client as part of our family and looking after them from there forward, because it's always a journey.
Yeah.
You know, a loan is just transaction at one point in time. We look after people on their journey from there forward, whatever happens. You know, you always make plans, life happens. Well, we need to be there when that's there, yeah.
We will come back to that, but I've got a bit of a question to you both without notice. So what sets Go Mortgage apart from the others? Because mortgage brokers and businesses are popping up everywhere. There are a lot of them. What sets you guys apart? I know it's early in the podcast. We haven't even dug through the story yet, but to give your listeners a bit of perspective, why Go Mortgage?
Well, I know why Go Mortgage.
Okay.
Or you might be really...
I'm interested.
Yeah,
You're interested?
Yes.
Well, it's on our wall. It's right there. But no, I think the main crux of Go Mortgage is that we're not just here for the initial. We're here to look after them. We're here to build them up, whether it's at their starting journey for first home buyer or whether they're an investor or whether they're downsizing. We want to be with them throughout their entirety of their journey and hold their hand throughout the entirety of that.
Fantastic.
And that's why we do have as many support staff as we do, because like Zav said, it's basically... While we understand that my part specifically comes in, you know, when they're getting their lending, that's a 30-year loan term. Anything can happen within the span of 12 months, let alone in 30 years. So it's a lifestyle change that these customers are making when they take out these mortgages, and they need people there for them to help them with life events when it happens, when they get married, when they have kids. And that's where a lot of our support team come in, because they come to us when they need to do renovations or when they need to borrow to, you know, buy the house or get the house ready for the kid or whatever. We're happy to be there for them throughout that entirety of their journey, and we want to see them grow. So that's, I think, what sets us apart, different from other mortgage brokers. We're not just the tick and flick, get rid of you. We want a relationship with you. We want to see your kids grow up. We want to see your house develop.
That's awesome. And anything to add to that, Zabe?
Yeah, that is definitely the crux of it, and you say it's on the wall. Our mantra is let's build your future. So we want to be there. You know, I always say, we talk about, you know, who are your clients? You go, oh, first home buyers, but the minute they bought their first home, they're no longer first home buyers. So who are they? And so we need to go on that journey. I guess the other big thing for me is, and the scars would probably show, we've seen some stuff, we've been through some events, we've got experience. There's reasons why and how we do things. You know, we're not pretentious, we don't wear the suit, but we know what we're doing. We've seen it before. And so I like to sleep at night. I like to make sure we do the right thing. I don't want to get a phone call in 6 months' time saying, hey, what did you do? If anything, we need to be a step in front of that. Not all our clients always realize when we put a proposal together, we actually think about what could happen, how's this work, what if, you know. It's because clients say, oh, don't worry about that. So yeah, what if you lose your job? What if you have a child? What if this happened? We want to make sure that when these questions come, we kind of thought about that and put a few buffers and structures in place that can cope with it. Yeah.
I love it. We're going to get to some questions shortly. But Alana, let's introduce you. Tell us a little bit about your story and how you even came to Go Mortgage.
Sure. So I guess I kind of learnt the same message that you learnt regarding property and how powerful it is. So my parents got divorced when I was about 13, 14, and my mum didn't really have an occupation or anything like that. She looked after us kids growing up. So when the parents did end up divorcing, my mum was an actually interior designer by trade. So a lot of what she did to develop her wealth over that time when she wasn't working was we'd buy these really old, you know, excuse my French, crappy properties, and we'd live in them while we were doing the renovations for 12 months. So every 12 months we'd move houses. And we did that obviously so that there wasn't the capital gains that was around at the time, because if it's an investment property then you have to pay it. So we basically just lived in renovations constantly. We never really got to enjoy the fruits of mum's labour, unfortunately. We on-sold everything, but I learnt very quickly how powerful that industry can be. On top of that, throughout schooling I found that my best subject was mathematics and accounting, but I was very lost in my early 20s, so I didn't really know what I wanted to do coming out of high school.
Sure.
So floundered a bit through retail, kind of did all that sort of thing, ended up in banking, and then within the first 12 months in banking, sat down with the home finance manager that was in the branch with me, basically went through what their job was, what they do, started helping them. I was their assistant, started doing loan sign-ups, chatting with these customers about their plans, and that made me really fall in love, and I think that was the path I was supposed to take.
Sure.
So within 12 months of me being in the bank, I think I was 22, 23, became a lender for 4 branches down south in South Australia. And then, that was the life story since then. So then, spent 7 years in the banks working as a home finance manager. And within 6 months, 6 months ago, I came and joined SAB as a mortgage broker. So I was ready to expand past just the one bank, was ready to give my clients more option. And I felt a little bit restricted being in the bank with one set of policy, one set of loan products and things like that. So it made sense for me at that point to start making the move into mortgage brokering.
Do you have a specific role within Go Mortgage in terms of the types of clients you handle, or
anything and everything?
Yeah. Well, that's
so
a good
anything from first home buyer to downsizer to SMSF. Starting to try and learn a little bit into the commercial aspect as well. Work with the credit analyst here to try and get my knowledge up around that side of it as well. But anything basically.
Yeah, cool.
Yep.
Well, we've heard sort of the start and a little bit about where we are currently, but maybe you can answer this, Xavier. Why do you think it's important to have longevity in this game? So for clients that are coming to potentially buying their first home, to come to a company like Go Mortgage that's been around for so long, what is the secret of your longevity?
So, well, to have longevity, I suppose you need to do the right thing, because otherwise you don't last, and that's always been there. But and that relates to the question you just answered, I suppose. There's no specific client, I guess. People go through life, right? So you need to be ready to help them, whatever they go through. The question around longevity and experience is, life happens. Like when I started in the industry, there was no regulation. Anyone could be a mortgage broker, and I think early in the piece there was ads, and we still see some, 2-day course, you're a mortgage broker. I'm like, yeah, good luck to you. But back then, it actually happened. So there was no framework, no regulation, no diploma, certificate, nothing. Right, and then we saw it happen. So in 2007, NCCP came through. So they put a framework around mortgage brokers and consumer credit protection in a way. Not far after that, they brought up a certificate. So you needed to then do a certificate. Then the GFC happened. So all hell broke loose around the world, and that saw people go insolvent, bankrupt. Trying to save their home, going in arrears. So there's been a lot of times in my career where people go, oh, that'll never happen, that can't happen. I go, you know what? And then it happens. And then you go, I never say that again. So today, I never say that won't happen, because, there's been too many times where you thought of that. But it just kept going, So post-GFC, they thought they'd do some reforms. The no docs and low docs disappeared. That was in 2012, I think, and then 2016, the Sydney market blew up, so the government got scared. It was a whole, we've got to stop investors, interest-only loans were frowned upon.
That was when the investor cap was introduced, wasn't it?
The investor cap, and then APRA put their fingers in it. So there's, whether it's global factors, personal factors from clients, or a government intervention, there's always seems to be something that changes the game. And when you've seen that happen over time, you understand the cycles, and you're able to help clients properly. Then we had the Royal Commission. That was pretty scary.
Yeah.
We honestly thought that, hey, we had a meeting in this room with the team going, I don't know if in 6 months we're still here. They might shut us down. So 6 months later, change of government, we were back in business, COVID came, and we've been super, super busy ever since. So it just keeps doing that. So I guess when you've got that experience, you can manage things better, not just business-wise, but also client expectations in that sense, yeah.
Well, I think what might be really helpful for the viewers and listeners right now is to really personalise you as the founder. And if you're willing to be a little bit vulnerable, you've mentioned you mentioned GFCs, you mentioned pandemics, royal commissions, all these sorts of things. For you as a business owner, this is more of a personal question, what has been the toughest time that you've seen and how did you get through it?
Toughest probably GFC for us personally. We nearly went back to zero. So nothing to do with the mortgage businesses per se, just life in general. And then we had to rebuild from there. So this is where, when you ask about experience, I don't do mortgage broking because I love red tape and fighting with banks. Like that's not the...
What are you talking about? That's half the fun. No, I'm joking.
But this is also why we have a team, because the team knows that once you start fighting with the bank, I better not be on the phone. I'm not always politically correct. So, you know, I mentioned property before. Property is so powerful. So we had to rebuild our portfolio. We are investors. We are investors ourselves. And, you know, I guess when you're in business, and you often hear it, you know, successful businesses have to fall over a few times before they actually make it. Yeah, I kind of partake in that. You learn every time. You do things better next time. And so, but what I also take on is I don't want others to go through it if they don't need to. I know a lot of people need to learn the hard way. They need to fall over themselves. Like, you know, when you have a child say, don't touch that hot plate, it's hot, first thing they do is put their hand on it. I still try and warn them. So I try and make sure that we've got a cover or gloves or something that comes with that. You know, so yeah, it hasn't been straightforward.
No.
You know, there's been tough times. There's been times where we thought, you know, we'd lose it all. Times we nearly did. And so I don't believe much in luck. People go, oh, you're so lucky. I'm like, lucky's just a lot of hard work and taking risks, you know, so.
We'll get into the question shortly, but I've got one more for you. Talk to us about your wife and her involvement in the business and being a husband and wife team.
Yeah, so she's definitely a rock for me. She manages all the stuff that I can't manage or I don't want to manage.
What's her title or role within Go Mortgage?
I suppose you could call her head of HR.
Yeah, okay.
She does manage the team.
Solves the political incorrect issues that you cause.
Well,
puts out a few fires.
Yeah, look, I like to be on the coalface, so and look after customers and get that pumping. But she organises everything else behind the scene that we need, and that's just not just business. You know, it's about life as well. So a lot of people separate job and or business and life. We don't. Like we only get one go. This is not a rehearsal, right? So we want to live it. She manages the household, the kids, and the business. She's definitely, you know how they talk about this male and female, and male can only have a one-track mind. There's a reason she does what she does, and I can't do that, yeah. So.
And that's been I mean, for husbands and wives that work together, sometimes it's a pillar of the marriage, and you know, it's a real strength of your relationship. Would you say that's part of it or not?
Yeah, it is a strength. It requires us to act accordingly too. So, you know, we're both in our second relationship, if you want, and we learn early on that, you know, being transparent, calling it as it is what makes it work, and we do that in life and in business all the time. So yeah.
Fantastic. We'll get to the more generic questions shortly, but Alana, a couple for you.
Sure.
Some of the focuses you have here focus on first home owners and investors. Talk to us a little bit about that within Go Mortgage.
Yeah, so for me, first home buyers are something that it's near and dear to my heart only because of the experience that I went through as a first home buyer. I unfortunately dealt with a mortgage broker that did my first mortgage, and it wasn't a pleasant experience.
Can you talk to us actually a little bit?
Yeah, absolutely.
About that experience?
Yeah, sure. So I used a recommended mortgage broker by, I don't know, friends of friends that had gone into trying to buy property. I was still very young. I think I was only 22, 23 when I built my first home. use parental guarantor. So I use mum and stepdad to use them there and their security to leverage my block of land and my build. But again, going through the build process, absolutely fine. That was all no worries at all. It came down to the first home guarantee amount. So the $15,000, that was a grant that was available in South Australia at the time.
Okay.
That for some reason, the bank had paid that money directly into my bank account instead of it going to the builder, which I thought was a little bit strange. So I contacted the bank directly and just went, hey, like, why is this money in my account? You know, does it need to go somewhere? Do I need to pay it to the builder? And I think I rang maybe 4 or 5 times, and I also went to the branch once as well and just said, this doesn't feel right, like I'm sure that this was supposed to go to the builder. They go, nope, these are your funds, we don't need them, we only need, I think they said, a couple of grand of it or something like that. So I went and put retaining walls in at my property. So this happened right at the early stages of the build being done. So it was when my slab got poured, and that's when the grant got paid to me.
Okay.
So I used that $15,000 to put retaining walls in at the property. It wasn't until it came to the last drawdown or the last progress payment that we realised that we were short cash for the last payment to be paid, and it was short by the first homeowners grant.
Right.
So we were scrambling because obviously we've put all of our cash that we had into this build. We've used the money to then do what we needed to finish the house off, because we just built a house in a dirt patch. There was no landscaping, there was no driveway. We were doing all of that after the fact. We were also renting, low income earners, me and my partner at the time. So yeah, it was a pretty stressful time. Luckily, my dad bailed me out and gave me the money I needed to just at least get the build done.
Sure.
But unfortunately, I ended up having to go down the ombudsman pathway.
Oh, wow.
Yeah, because I didn't feel that it was right, especially to do that to a first home buyer. Put them through that level of stress and anxiety, and I was in absolute tears. Like, I was at home just beside myself thinking that we weren't going to settle on this house. I was thinking the worst.
Yeah,
the house is going to be taken from me. You know, I've worked the last, 3 years of my life as a full-time adult, as you'd say.
Yeah, of course.
Living out of home, saving as much money as I can to get to this point. And then I was also stressed about the fact that my mum and stepdad have gone guarantor for me as well. What does this mean for their property if my house isn't finished? Can they take their home? There was all these questions that were rolling around. So yes, I did unfortunately take the bank to the ombudsman. I was seen in favour of, luckily, because there was call recordings of all the calls. Because I'd rang the call centre, which was probably the smartest thing I could have done. And yeah, they'd pulled the call recordings and realised that yes, I had been given the wrong information several times. The original plan from the bank was, we can give you the extra $15,000 on top of your mortgage, that's no problem at all. And I said, yeah, well, that's fine for you, but then I'm paying interest on the 15 grand that you've lent me, so that's not really fun of it, is it? Like, that's not fair. So I said no to that, and I told them I was taking them to the ombudsman, and yeah, they gave me the 15 grand back from the ombudsman. So that was my story, unfortunately.
And this is why you're so passionate now about people.
Absolutely.
Yeah,
making sure that when I've got first home buyers in front of me, they understand everything it is that they're signing up for. So they understand, especially when it's a build, they know where the deposit's going. They know what stamp duty is. They know what the transfer is. They know they need to get building insurance. We even have conversation with them about income insurance. Well, me personally, I have a conversation about income insurance and life insurance, because a lot of that's not spoken about. You're taking on the biggest debt of your life, and especially when you've got really young people that have never bought property before. If anything happens, they get sick, they injure themselves at work. We've seen those panic phone calls come through when they're like, oh, I've hurt myself, especially in COVID. That was a traumatic time, especially for a lot of lenders and brokers. Like, I think there was 1 week in the bank where it was I think it was the first week in April when everything fell to hell, when 2020 happened. And it was just, my phone didn't stop ringing. And it was client after client after client. My husband's lost his job. I've lost my job. How are we going to pay the mortgage? How are we going to feed the kids? And I was coming home after 2 weeks of that. I was in tears every night, because it's like, how do I help these customers? I can't, I didn't have an option for them at that stage. We're in the middle of a global pandemic. Yeah. We had no idea what was going on. Luckily, the banks came in and they did put some good measures in place. But yeah, I'm very passionate about that for first home buyers, because I want them to understand what it is that they're doing, but it's also this information that they're going to use to grow themselves later on. Like Zav said before, they're only first home buyers once. The information that you give them right up front educates them and uses that information for every property purchase that they do after that. Helps them buy investment properties. You have a chat with the first home buyer who comes to you and says, I want to spend $1 million on my first home. 9 times out of 10, you're going to have a conversation with that first home buyer. Is that really the right thing to do? Are you really want to mortgage yourself to the hills for your first home? Because the first home is supposed to be the stepping stone. Get your feet wet, learn how to manage a property, because it's a big expectation to manage a property. You know, you've got anything from, you could have council rates. That's not a thing that most people don't buy. That, you know, especially if you're renting. Council rates, water rates, electricity. The cost of all of those is through the roof.
Yeah, absolutely, yeah.
And most first-home buyers have never had those expenses before. They just think, oh, I want the $1 million property, and you know, we can afford the mortgage repayments. And it's like, yeah, but what comes after that?
and that's the power of experience, I guess. You know, there's also something that you bring to mind for me is that the advice system is broken in Australia.
Yeah.
So they broke the financial planning industry with FOFA early in the 2010s, I think. And so it's really hard. If you want financial advice, who do you go to?
Yeah.
You know,
A lot of people go to TikTok.
Yeah.
That's a problem. Unless it's us on TikTok.
Yeah. And then you listen to every word we have to say.
That's
okay.
right. That's where we're sending you guys. Yeah.
That's right. So, mortgage brokers are becoming the financial counselors out there, along with accountants, because we have the experience. We can offer it often for what seems to be free, but we care. So I think, for whoever can leverage the experience that we have, it certainly gives them a massive stepping stone.
Absolutely.
Yeah.
There's a lot we're going to cover in the next few episodes, but and we're going to talk about stories in the next one, some real life examples, which we're excited for. But we have teased this whole episode about some questions, some fan questions. These might be a little bit quick fire. I'm not sure if we want to go back and forth, or you guys just want to jump in, whoever thinks they've got the best answer.
I was like, do we get buzzers?
Yeah, I know. We should have done that.
We should get your buzzer.
Maybe next episode.
We'll just start screaming. Yeah.
So what we'll do is, these have been written into us, so we're going to answer these questions and hopefully help a few people out, because these are very good questions that a lot of people don't know the answer to. So the first one is, what is my credit score, and do I really need a good one?
There's two parts to that question. So what is your credit score? That's something that you need to find out. Obviously, we can find that out for you, but 9 times out of 10, you're better off doing that yourself and going through the online. So it's with Dun & Bradstreet, Experian and Equifax. So I think are the 3 main credit reporting bodies. Me personally,
so you can do it on your own.
Absolutely,
okay.
Yep. So I've got an app on my phone called ClearScore. So it tells me what happens on a monthly basis with my credit score. It tells me both credit scores, Ilion and Equifax. So I've got both, because we do have 2 different types of credit reports in Australia as well.
Great.
Just to make it more confusing.
Fantastic.
So I keep that on my phone. It gives me monthly updates. It tells me every time my credit score changes. It tells me, you know, what that means for me and if it's a good credit score in the scheme of Australia or if it's not. And then on the second part of that question, if you need a good credit score to get a home loan, the answer is both yes and no. It depends on the lender we send you to as to whether or not the credit score falls into it. And it depends on the application itself as well. So if the application's got a lot of good merit and it's got a lot of good points and we have a really bad credit score due to a default, for example, or we have a little bit of not so good history on the mortgage, but it's due to the fact that they were separating and the husband's just stopped paying for the mortgage or whatever, and we can explain that to a lender, and we go to a lender that will allow us to explain that, there may be a bit of an interest rate hike by having to go to a non-standard lender to do those sorts of things, but we can absolutely do that, and it's a short-term solution. So a lot of what we do in regarding to non-conforming for low credit scores and stuff like that, we usually get them there with a little bit of a higher interest rate, just so we can keep them in their property, make sure they're still okay, keep that loan there for maybe 12 months to 24 months, keep touching base with them that they're keeping on top of their mortgage repayments. Once that's done, refinance them back to a standard lender, get them onto a better interest rate, look after them from that point.
So going just a little bit deeper for someone as naive as myself, in terms of an actual credit score number, what is considered good or bad, and how do you increase or decrease that score?
Okay, so credit score, usually Equifax is the Bible, the one that most of the banks use, right? Your credit score starts at 700 and then it goes up to 1200 or down to minus. Actually, it used to go down to 0, now it goes into minus. Generally, yes, you need a good credit score, and how does that come about is how you manage your affairs. So
sorry, is 700 good, or is that just smack bang in the middle? What's good? 1,000?
It's actually good, but it's where it starts. So I suppose it's the 0 line.
Okay.
If you're under that, there's some information in your score that dragged it down. If you're above, then it's some score that dragged it up. A lot of things come into play, but the main things that people don't realise is every application you make for credit comes into there, it's usually looked as a negative if you start applying for a lot of stuff, especially like, afterpays, all the buy now, pay laters, credit cards, short-term loans, all that stuff's not looked at very well. And then there's, once you have facilities, your repayments. So people go, oh, don't worry, I made the payments a bit late, but I made it. No, we worry about that because now it gets recorded for 2 years on your credit report. So just like the other day, clients say, oh yeah, I was a bit late, but I closed it now. So yeah, but closing it doesn't erase the history. You're going to carry this for 2 years. So I think it's more important to understand what goes in the credit report because that's what ends up generating your score.
So for someone like myself, I'm in my 20s, and probably a lot of listeners that might be looking at their first home, in terms of easy ways to start to improve that, do you recommend credit cards, or do you say stay away from credit cards? Where do you guys sit?
Me personally, I really hate that myth of if you get a credit card, it's going to boost your credit score.
So that's just a total myth.
I'm with you.
Yeah.
That's right.
Yeah.
That's right.
While, look, debts and things like that, if you've had history, it can play into your credit score, absolutely. If you've got an open credit card facility and it's there and you're making your payments on time every month, absolutely, that's fine. But we would never recommend that a client goes out and gets a credit card to bump up their credit score. It's not going to do that.
That's a great clip right there, I can tell you that.
Stacking debts is not a good idea.
Okay.
And I know you said we'll go through stories later, but we're going through one at the moment where this lady wanted to get married, and so she wanted an extra $40,000 on the home, and said, yeah, we'll organise it to pay for the wedding. A bit impatient, she didn't wait. She went to get 3 personal loans and a credit card. In the meantime, going, yeah, the home loan will come. She completely destroyed the score. We can't get the home loan now.
Wow.
So, it can make that difference.
And when we say completely destroyed, it was like a couple hundred credit score points down. Like it wasn't just 50 or 60, it was a couple hundred.
With the score, it changes colour, right? 700 plus is green, then it goes yellow and then red. We went from green to red. And
ouch.
So it's the same amount of money just that she wanted, that she got. She just got it differently, and now for 2 years she's locked out. So she's going to have to pay those personal loan and credit cards at the high rate. Nothing we can do about it. So.
Interesting. We'll do a few more, and then we might save some of these for episode 2, which has come out. But do I need to have my home paid off before I get another loan? That's a great question.
Definitely not. No. Definitely not. So I think we've seen with COVID how quickly property can go up, right? When the property goes up, we create what we call equity. So equity is the part of property that you own. We can actually go back and tap into that. So borrow some of that. Once you have a property or 2 or 3, equity starts growing faster and faster. What's hard for a first-home buyer is to put that first deposit together. The second one's easy, because your existing house creates it for you. So that's what we call equity. Once you have equity sufficient to get another property, I'd say, and the cash flow is okay, obviously, I'd say that's when you need to start looking at it, because property grows faster than anything you can save, right? So that's where we start to have a good debt, bad debt. Debt's good if you invest it, and it grows in value. So
fantastic. Next one. Can I buy property in my SMSF?
Yes, you can. Do you know what an SMSF is?
No, I was hoping you would. I was hoping you'd. Yeah. Whoever wrote that question in, that's naughty.
So SMSF, for those that don't know, is self-managed super fund.
That makes sense.
Yes, and yes, you can purchase properties in an SMSF. They have to be investment properties though, and you can leverage your super balance to do that.
Okay.
So it's
recommended, or
definitely.
This is where the financial advice piece, the disclaimer comes in.
Yeah, we'll put that across.
Correct. So, but the interesting thing is this, right? I hear all the time, and whether you're in your 20s or 30s or 40s or 50s, oh yeah, but that's super. Don't worry about it. But it's still your money. Like when you go to work, you get 10% of your income put in your super fund.
Yeah.
Right. And then it's just funny that if I gave that to you in cash, you go, well, yeah, an extra 10%, I'll take it, right? But because it goes over there, no one looks at it. And I'm like, why? We should definitely be involved in that, because over a 20 or 30 or 40-year career, that's going to amount to a lot, right?
Yeah.
It was put there so that you wouldn't be a burden on the government when you retire. What if you could double or triple that money?
Yeah,
you
absolutely.
wouldn't just be a pensioner. You'd be pretty cool, right?
Absolutely.
And so just the same as you can leverage your money into property, you can leverage your super into property and really make it work for you. So
because the whole point of super is an investment for your retirement, right? So you can control whether it's in cash, whether it's in shares, or whether it's in property. So if you do want to use that superannuation to then invest that in the property market to purchase an investment property, that's considered to be a superannuation investment growth strategy. So you can absolutely do that.
I think that would be a great podcast topic for an entire episode. We'll do one more for this episode. So how much deposit do I need to have to get a mortgage loan?
If you are a first home buyer, you can get under the home guarantee scheme if you meet certain requirements. So there is income cap. There is whether you're a permanent resident or if you're a citizen. Luckily, that opened up to permanent residency as of the 1st of July, which was cool.
Oh, cool.
But essentially what that scheme is, it gives you a property price cap, which in Queensland is $700,000, and all you need is a 5% deposit plus your upfront costs, which is your stamp duty and your conveyancing and solicitors'
That's incredible,
fees.
5%.
Yeah.
Wow.
So with the costs for a Queensland purchase property, all up it comes to about 7-8% of the purchase price overall that you'd need when we take into consideration stamp duty and things like that.
Look, it's a broad question because if you said, can you answer me in 3 or 4 words, the answer is 5%.
Yeah.
It's not 20%. There's a myth out there you need 20% to buy your own home. You don't. 5% is it.
Yeah.
What Alana's talking about is that when all hell broke loose in the world, COVID came, the government got really scared about what's going to happen here. What is the property market going to collapse? So they thought if they give an incentive to first-home buyers to get in, that might help, right? And so you mentioned that you use a parental guarantee when you bought your first home. That's the bank of mum and dad, right? That's great. The government, So the government thought, hey, what about we do the bank of the government here and help out? And so they came in as a guarantee. So that means that still, as of today, you can buy your first home with a 5% deposit, pay no mortgage insurance, and depending how much you buy, there may be no stamp duty either. So like, we're based in Queensland. If you buy a house for $500K in Queensland, you only need $27,000. So that's pretty low entry to get in.
Yeah.
Max you can get in metro areas 700,000. You still only need 57,000. So that's if that's a measure. But 5% is definitely the minimum you need.
Yeah.
There we go. Well, hopefully we got a few questions answered for the listeners and viewers. We're going to cover a lot more in the next episode. But guys, your first episode down.
We did it.
How do you feel?
We did it.
You did it. Well done. Cool. You guys are naturals on the mic. So we always have to do a call to action though. So how do we find you? How do we contact you? How do we get involved with Go Mortgage?
So Go Mortgage is on all the socials and website. We did have a tagline. We're the best mortgage brokers on the Gold Coast. Just Google it.
Love that.
Find us, so.
Just Google it. I like it.
And we'll see you all for episode 2.
Thank you.
Thank you.